Nasdaq just hit all-time highs, and most traders are asking one question right now. Should I be buying this breakout? Here is why I'm waiting until Tuesday before placing a trade. This is the Displacement Diary. Let's get into the week ahead. Before I go into the top-down analysis, I want to show you the one signal that is making me cautious this week. And I want to show you this now right at the start. This is Nasdaq, S&P 500, Dow Jones, and the US dollar. Now you see that Nasdaq and S&P 500 made higher highs, while Dow Jones failed to make a higher high. This is SMT divergence, smart money technique. It means the three US indices are not moving in sync. Just look at that. And now in this bottom corner, this is the US dollar. When Nasdaq made a higher high, the US dollar failed to make a lower low. Under normal bullish conditions, a rising Nasdaq should push the dollar lower. It did not happen. That cracking the correlation tells me there is something underneath the surface, possibly institutions hedging their positions ahead of a very specific event on Tuesday, and I'll cover that in a moment. But this is the signal. This is why I'm not chasing this breakout. Let me show you this more clearly. NQ made a higher high, SPX made a higher high, and Dow failed to make a higher high. Now, Dow is considered the weaker of the three benchmarks. It represents fewer companies and is price weighted rather than market cap weighted. So alone, this divergence might not concern me. But combined with the cracked dollar correlation, that is a warning sign I can't ignore, especially when we are trading at all-time highs with no historic price reference above us. Now, let me explain why I'm specifically waiting until Tuesday. So on Monday, there is no news. Tuesday, there are three red folders there. And that's the big one, the Fed chair testimony. Kevin Warsh is the man being nominated for replacing Jerome Powell as the Fed Reserve Chair. His views on interest rates, hawkish meaning higher for longer, or dovish meaning cuts ahead, will move the market significantly on Tuesday. Here is my if-then framework for Tuesday. If Warsh is dovish, bullish continuation is confirmed. I look for longs. If Warsh is hawkish, I watch for a 4-hour market structure shift on the downward side, and I stay patient if on Tuesday the testimony is unclear. I'm not trading Tuesday's New York Open. I will trade after the testimony. Let me take you through the top-down analysis, starting with the US dollar. So this is the weekly chart, and the dollar is bearish. Price closed below this bullish volume imbalance, and that shows momentum on the bearish side. However, this is important. Price has so far respected two key barriers on its way down. So the first one is that CB, 50% halfway of that line. Price closed above that. And the second one is the bullish order block, that line. Price tested the wick of that candle. It didn't test the body, but it's tested the wick. And that on its own gives caution when you are looking at the dollar going down. Price has to close with a body across this volume imbalance and this CB for me to confirm bearishness, and a retracement of the dollar is a headwind for Nasdaq. Keep that in mind. On the daily chart, this is where I'm being cautious about bearish dollar thesis, which is there. So on Friday, you see price respected this CB high, and that's why this caution is there for that reason. And it also respected these three candles, which are the bullish order block on the daily chart, and repelled. That's the reason for the caution for me. So for this week, my view on the dollar is cautious bearish, primarily bearish on the higher time frame, but with a potential short-term retracement on the daily that I need to respect before going all in on NQ longs. Now let's look at Nasdaq, starting from the monthly chart. Nasdaq is at all-time highs. We are in uncharted territory. There is no previous price structure above price right now that can act as resistance. So how do we set targets? And this is where the Fibonacci projections come in. So I've measured the swing high to the swing low and projected it to one standard deviation. Price is currently at 112.5% there. And the next reasonable target will be the quarter standard deviation all the way to the half standard deviation. And if the NQ is very bullish, it can go all the way to the 3/4 standard deviation. So those are the targets to look at. So the monthly candle is still forming until it closes above the monthly relative equal highs. I have to hold some caution that this could be a breakout trap. Now, on the daily chart, and this is the most important technical level for me this week, the bullish suspension block was formed tethered to these relative equal highs. Now, I have to be honest with you here. Going into Friday, this level had not been marked. If I had marked that, I would have seen that this was not a retracement, and that cost me minus 4.7K. If I had that suspension block marked, I would have seen immediately that price was showing institutional buying, not a reversal. The bull case for this week, if the suspension block holds, that is a strong signal. If price runs to the standard deviation, half standard deviation, that is a strong case as well. Or if price retests the bullish suspension block and goes up, that is a strong case for bullish bias. And then on the bearish scenario, I'll draw something here. I'm looking at a 4-hour market structure shift on the downside and a close below the relative equal high. So I'm looking at something that would do that and then go down. So this is the area that I'll be monitoring: a close below the relative equal highs and a close below this bullish suspension block that confirms bearishness. So let me bring all this together with my actual playbook for the week. Monday, there is no major news, bullish bias, small size only, wait for an A plus setup, but that bullish suspension block is the one that I'm eyeing. Tuesday, red folder news, so I'm going to avoid New York Open, wait until the testimony has been done, and after that it's an if-then framework that I'll be looking for. If it's dovish, then I'll buy. If it's hawkish, I'll wait for the 4-hour market structure shift and a close below the relative equal highs monthly and that suspension, bullish suspension block. And then on Wednesday, the direction should be clear in terms of the sentiment. And if it's bullish, the target is the half standard deviation on the Fib projections. If it's bearish, I'm looking at the 4-hour market structure shift for shorts. And the target will be any internal liquidity that's below price inside the relative monthly equal highs. And then on Friday, I owe you this one. Last week, Friday cost me minus 4.7K because I broke my own rules. So this coming Friday, 2 strikes, and then I'm off the charts. And low risk, 0.25% maximum risk, no pyramiding. So I'll be watching for the TGIF confirmation, in other words. The FTMO 100K challenge, phase 2, and my balance is 96.6K, and my profit target is 105K to pass. I've got a buffer of 6.681K. Process over outcome is what will get me there. So this is the full week ahead analysis for the 20th to the 24th of April. The market is giving us a genuinely complex week. All-time highs on Nasdaq, a cracked dollar correlation, SMT divergence, and a Fed Chair-Designate testimony that is shifting the direction entirely. My approach: patience. Let Tuesday clarify the picture, then execute with discipline. If you are not subscribed yet, hit the subscribe button. I post the weekend analysis every Sunday and the weekly review every Saturday, showing you exactly how the trades played out. And remember, nothing in this video is financial advice. This is my personal trading journey documented for educational purposes only. See you in the next video. Process over outcome.